As we wait for people to roll in here, I thought a good way to start this tonight was, since I didn't really have a specific topic I wanted to talk about, I thought I would bring up a private message that I got on Reddit, which I thought was pretty awesome. And by the way, for those of you who don't know who I am, my name is Chris. I've been a longtime subscriber to the various stock market subreddits on Reddit, and I've been a longtime trader, and I'm now a software developer, half trader. So I run LazyFA.com, and I build a lot of applications and scripts that work in the stock market. So that's who I am. And I got this private message, and it's a question that I've gotten many times before. So I thought I would bring up what the question was and also bring up what my answer was, because I thought it could benefit everybody. I've gotten this question a lot of times. This person said they were a 19-year-old who started gaining interest in trading recently, and they saw some comments on a post about 2 years ago about how traders can profit if they're disciplined and stick to their system and strategy. And this person said, I've heard the term systems and strategy being used quite frequently by traders, but I can't seem to understand what they truly mean. If it's possible, could you share with me what are some of the components of a system, maybe things like sticking to your risk reward, and what does a strategy in trading mean? And it's important to really understand what is a strategy in trading, and what does it mean when traders say they have developed a system. In my opinion, the way I interpret it is that a system is basically just a set of rules that you follow. So in order to develop a set of rules, you need to trade a lot. You need to see what works and what doesn't. And that's why it takes so long and it takes so much money to become really consistently profitable in trading, because you really have to use like a ton of trial and error and finding out what works and what doesn't. And it costs a lot of money in the process, because everything that's an error actually costs you money. So as a developing trader, you're probably going to blow up a couple of accounts. You're going to make mistakes. You're going to lose money. You're going to make money. You're going to think you found the answer. And then all of a sudden the market will change and your strategy, which worked before, doesn't work anymore. So basically, in terms of developing a system, it's a whole lot of trial and error and a whole lot of data analysis. A system and a strategy in trading are, in my opinion, are basically the same thing. But the idea in general is just to develop a set of rules that you always follow in order to take the emotion out of the trading. So for day trading, you might have, like, let's say, a group of specific named chart patterns that you always trade, and a set of rules for how much money you're going to risk on those different patterns and different trades and different types of stocks at different times of the day or week or different times of the year. The idea is basically just to be specific and formulate a set of concrete rules and regulations that allow you to trade systematically, as opposed to letting, whether you're making or losing money, and letting your emotions dictate your decisions. The trouble with this is that even if you are able to survive long enough to create and fine-tune your system or your strategy or your set of rules, human nature will make you want to avoid loss and chase gains. So even after you have these rules, it's tough to stick to those rules when the market's going against you. But the ones who do, the ones who stick to their rules and stick to their strategy and who really do the analysis to understand what works and what doesn't, and who are constantly able to be dynamic and to be fluid in the market and to change with the market, those are the people who long-term will survive and will make money. Even if it takes you 5 or 10 years to become consistently profitable, in my book, that's fine, because if it takes you 10 years to become consistently profitable, it took you 10 years, but you have a sustainable source of income that is never going to go away unless the entire world economy collapses, which is unlikely. So I thought that was a good question. I figured it was a good way to start this off and just to share that with everybody. So let's dig in to the questions that have come into the chat so far. I'll start with one that was, somebody wanted me to bring up what the IRA contribution limits are and the 401k contribution limits are. Since we're coming to the end of the year, the market is, we're coming to the end of the trading year and the end of the tax year, and things are going to change, like the contribution limits for what you can contribute to an IRA, what you can contribute to a 401k, and so on. And if I remember correctly, I'll Google this on another monitor here just to be certain, but the IRA, so IRA 20, so 2020 IRA contribution limits looks like are 6K. So you can contribute up to $6,000 to an IRA. And I think for 2020, the 401k limit is $19,500. So if you are making contributions to an IRA, to a 401k, these regulations and the limits change every single year. So just look it up and make sure that you know what your limits are and that you're maximizing what you can contribute, because that's all tax-free gains until you take it out. So always good to know what those limits are. I think that same person, they wanted to know if I tracked the Trump thing. So yeah, that's obviously something that is, well, it probably won't affect the market at this point, honestly, because I think right now everybody kind of knows how things are going to play out. It's happening right now. I think the last I looked, they had like 35 or 40 minutes of comments left, and I think so they should be probably voting right about now, but I don't know. I'm not actually looking at it at the moment. But yeah, I mean, the whole Trump impeachment thing is it's a significant event, but I think that right now everybody kind of realizes that the House is controlled by Democrats and the Senate is controlled by Republicans. So yes, Trump is most likely going to be impeached. Will he be removed from office? Probably not. With that said, if something goes differently than what people currently expect, which is probably for it just to be, tossed out in the Senate and for Trump to be acquitted and us to move on with our lives, if he is by some chance removed from office, I think that has a serious potential to have a major impact on the market. The question is simply whether it will go up or down, but it will definitely introduce some volatility. So if by some chance Trump ends up actually being removed from office by the Senate, if he is in fact impeached, which he may be already at this point, I don't know. But if that does happen, it's got the potential to have a major effect. So what I would be watching in that situation would be the volatility indexes, UVXY, VIX, TIVX, and so on, and the major indices themselves. So SPX, the Dow Jones, the NASDAQ, the major market indexes. But gold, any kind of the major commodities, gold, oil, silver, major market indices, volatility indices, those are going to be the ones that will be real wild if things don't go as expected. And the other question was, I would love to hear about cyclical stocks. So throw this into the live chat channel if you would. What do you want? What did you want to know about cyclical stocks? Are you looking for something specific? So while I'm looking at a couple of other questions, see if you can give me some more details about that. Someone had asked, what are the current support and resistance levels for SPX? So right now, I mean, there is pretty much no resistance right now because we're at all-time highs. So it depends on how in-depth you want to go, whether you're talking about like 5-minute or 30-minute resistance or daily chart resistance. If we look at the 30-minute chart, for example, 320 has kind of become the key level here, but that hasn't stopped it before. So there really is no major resistance on the daily chart right now. There's no indication, at least in my book, that things are not going to continue higher right now. We might get a short-term pullback to 315 or 316 or something like that, just before this last breakout. But, in the bigger picture, I don't think there's any reason why the S&P 500 should stop, barring some kind of crazy news about the Trump impeachment or about China or some other significant macro event. All right, next question. How should we interpret implied volatility? What's an implied move? So implied volatility is basically a prediction by the market at large about how much of a move they think a stock is going to make. So if we look at, let's say the January 17th, 2020 SPY options. So they've all got about looks like a 10 to 20% implied volatility rating. So this is relatively low implied volatility compared to something like PTI, which has been extremely volatile lately because of their recent clinical trial results. We can see they have, for the same options, January 2020 expiration, you're at 100 to 200 to some of them are over 300% implied volatility. So in layman's terms, what implied volatility does is basically jacks up the premiums. So the higher the implied volatility, the more expensive the options are going to be. And implied volatility will generally rise leading into significant events. So things like earnings, clinical trial results, new contracts, any kind of significant news between like merger decisions and stuff like that. Anything that could significantly move the stock will jack up the implied volatility. So what you should know in terms of how to use it in your trading strategies, just realize that if a stock has 700% implied volatility on the options, it means that the market is expecting a large move very soon. Well, maybe not necessarily very soon, but it's expecting a large move in the future of that company. So you can interpret that however you want. The other thing that I think you should consider when you're looking at implied volatilities is just that the higher the implied volatility, the more the option has a chance to decrease in value, even if the stock stays at the same level once that event happens. So if you've got a stock like, let's say Tesla, for example, and they have earnings January 29th. So these January 31st expiration options, as it gets closer and closer to January 29th, as it gets closer and closer to their earnings, this implied volatility will go up and up and up and up. And that will increase the premiums and the prices on these options. So if you buy right before earnings, you're going to pay a huge premium because nobody really knows what's going to happen in terms of their earnings. It could go up, it could go down, it could be a significant move. So the implied volatility will jack up those premiums. And once the earnings happen, all of that implied volatility comes out of the options pricing. So even if the stock moves a lot, what's called the implied volatility crush can take the prices down significantly, which means even if the stock moves in the direction that you expect it to, if it doesn't move enough, you're still going to lose money on the trade. So basically, high implied volatility means high options premiums. So just be aware that, when the stock has high IV in the options, you're paying a bigger premium for those options. So you should expect a bigger move in order to actually make money on it. Let's keep going. What else we got? All right. So somebody says, hey, I'm totally new to trading. I want to get started with day trading. What books would you recommend reading to get started? So there's not a lot of good books, in my opinion, on day trading. One that I do really like is, let's see here. I want to say it's called Trading from Your Gut. Curtis Faith. Yeah, this was one of the Turtle Traders guys. I have this book. I think it's really good just in terms of trading in general, because it teaches you to sort of use your instincts and your gut in trading and to kind of stay away from your emotions. So I definitely recommend that one. What I think is more important in terms of day trading is learning technical analysis. So learn technical analysis. Get good at identifying different chart patterns. A good example is like this bull flag right now that's developing on LK. Identifying this flag is what's going to help you in terms of day trading and short-term swing trading. This is just one pattern, but there's a number of these types of patterns that tend to resolve themselves in the same way. And actually, if you look over here, that same pattern was visible over here in this little wedge. And you can see that once it came over this $20 level, it ran from 20 to 28 relatively quickly. So that identifying those patterns is definitely real important in terms of day trading. The other thing that's important is understanding things like float and short interest, and clinical trial results are definitely a big one. So basically any kind of news event that can cause a lot of volatility in the stock, you want to try to learn how those things can affect your trades. All right. Have you ever heard of a strategy that shorts or long stocks that are extremely overbought or extremely oversold in a day due to news? Yes, I absolutely have heard of that. I used to do that all the time, actually. You mean like this kind of thing, right? Even if this one in particular looks like it was a few weeks that it, took to really get moving, but it went from $1 to $4.75 in a very short amount of time. This one was on a run up to clinical trial results, in anticipation of those results. And when the results came out, they were actually positive results, which is interesting because the thing was so overvalued that even a reasonably positive clinical trial resulted in a 60% drop in the stock price. Most likely because the thing is really worth, 75 cents or $1, and it was at $4. So now that the results have come out, they were positive. So it corrected back to, a 100 or 75% gain from where it started, which, it's still good if you bought this thing at 80 cents and it's now sitting at $1.50. But yeah, there's definitely strategies out there that do this. The real danger with trading countertrend like that is just knowing when you're wrong and being able to admit when you're wrong rather than just go, well, that didn't really work today, so I'm just going to hold it for a swing trade, and then you end up holding it for the next 5 years and losing 99%. So you don't want to do that. All right, what else we got? Question, how do you go about choosing stocks? This is a good question. How do you go about choosing stocks to buy for the first time, especially if you have some leftover scholarship money as a student or something like that? So one of the things that I like to do in terms of buying a stock for the first time is first you need to define why you're buying it, right? Are you buying this stock because you want to hold it for 5 years or 10 years, or are you buying this because you're trying to make a little bit of money in the next month and then you want to bail on it and you don't really care what happens after that? This is going to dictate whether you whether you do research on a company that has some actual real potential and has, a fundamental reason to go higher or go lower if you're shorting, or if you're just, looking to make a quick gain. So let's throw up FinViz here. One of the best ways to find new ideas is to use a stock screener like FinViz. So I don't typically set rules based on price, because whether you buy 10 shares of a $100 stock or 1 share of a $1,000 stock, it doesn't really make any difference. You're still investing $1,000. So don't worry about the stock price. Worry more about whether the thing's actually going to go up or down. So some of the things that I look for in terms of just identifying good stocks to trade for short to medium term trading, I want something that trades a decent amount of volume. So you might look for stuff to trade, say, over 1 million shares of volume each day. If I'm looking for something that's going to move relatively quickly, you could use something like relative volume, which says if I set this on over 3, for example, these are all stocks that trade on average about, at least 1 million shares per day. And relatively, I think this is so this is intraday adjusted and compared to the 3-month average. So if they're normally trading 1 million shares, relative being over 3 means that they traded at least 3 million shares today. So these stocks are typically the ones that will be active. They're higher volume stocks and they have a lot of interest lately, which is giving them a lot of relative volume. If you're looking for more fundamental trading ideas, so companies that you actually believe have a fundamental reason to increase in value, or maybe they're undervalued, then you might start digging into things like PE ratio and growth ratios and look at their debt and their cash and their profit margins and compare them to their competition. This is how I generate ideas, but I'm primarily a technical trader, so a lot of my ideas come from just looking at charts and running through some of these screens that I have, looking for different types of stocks, so like low float technology companies, and then I'll just set it on charts and just scroll through the charts, and I'll look for stuff that's in long-term uptrends and long-term downtrends, depending on which type of trade I'm looking for. But there's a lot of different ways to generate ideas. The other way you can, once you find something, I actually run a service called LazyFA, and once you find something that's worth looking into, you can use a site like LazyFA to actually do some analysis on it. And this actually goes into what the other person was asking about the cyclical stocks. Apparently I don't know my own password. One of the really nice things about looking at their financials in this way is that it allows you to see things like, are they actually a cyclical company? If we look at the quarterly revenue of Apple, for example, you can see this is very clearly a cyclical company because you have a spike in the revenue, and there's a pattern in the revenue chart which shows the cyclical nature of how they generate revenue. This would be similar on a lot of companies. Let's look at like Kohl's, for example, would probably be a cyclical stock because it's a retail company. You'll see it in the quarterly trends. And yeah, look at, so there's a big spike in each year, when they have their biggest quarter. All right. Lugi wants to know, do you use more than one trading app? And if so, how do you go about predicting the movement of biotech companies? When I need to know something about biotech companies, I ask Slightly Communist because he's the biotech expert. But no, in all seriousness, it's very, very difficult unless you are a medical doctor or some sort of a scientist to predict moves like what happened in Proteostasis Therapeutics here. It's difficult. And you can see that even though this company had positive clinical trial results, their stock still dropped by 60+% in one day, which is, it just goes to show you that you really can never predict what the market is going to do with 100% certainty. Question, what are your thoughts on value investing? Michael Berry will find stocks with a solid balance sheet and around 25% off the 52-week low. Wondering if you've ever used that strategy. So I've never personally used that exact strategy, but I mean, it sounds like a perfectly valid one. I don't know if it needs to be that specific, that it has to be 25% off the 52-week low. I think it's more important to look at sort of the long-term picture of the stock. But sure, I mean, there's nothing wrong with that at all, in my opinion. I love the idea of finding companies with solid balance sheets. I also think that identifying companies with good cash flow statements is super important because balance sheets can be manipulated as well as income statements can be manipulated. So being able to track the cash in and out of the company via the cash flow statement, and even the cash flow statements can be manipulated, but it's a lot more difficult to manipulate cash flow these days than it is to manipulate things like net income and your balance sheet. So yeah, agreed. The question is, what defines a solid balance sheet? Okay, so someone has a trade idea, Boeing calls. What strike price, what expiration? Boeing has been channeling here in this like 320 to 400 area since March. So, I mean, it appears that it's at the bottom of its channel. So buying Boeing calls right now doesn't seem like a terrible idea as long as you're not buying calls that are, at $500 a share. So, Johnny, you said that the thing that we talked about 2 weeks ago, placing a buy offer $1 higher than the short. I think you might be talking about selling credit spreads, which we did talk about a couple of weeks ago. So that's not really, I mean, it is a method of short selling, but it's not really what is meant by short selling. So in that strategy, what you would do is you would find a company like Expedia here, which has come from 95 to 115 in a very short period of time. It's basically gone straight up, and it's sort of running into previous resistance here around the 115 mark where it bounced back in May, and then it opened there after their earnings report in November and had this large collapse down to under 100. Now they're back up there at that same resistance level again. So what I would do here is I would sell a call credit spread. So I would sell say like a 116 strike call and then buy a 117 strike call. And the idea is basically for it to stay under $116 for, say, a week, depending on whatever expiration you choose. So like the 116, 117 spread would have been a decent one this week. I actually tried to get into it, but I was too late. But that's basically what it would be. So you would sell a 116 and buy a 117. So in terms of literal short selling, basically all you're doing is selling the stock before you buy it. So you end up with a negative share value in your portfolio. So you would have like, say, negative 100 shares, and then in order to zero it out, you would buy that stock back in the open market. So effectively what you're doing is taking a loan from your broker in the form of shares. So you borrow 100 shares from your broker, you sell them into the open market, you hope that the stock goes down, and you can buy them back cheaper at a later date. So it's effectively buy low, sell high, except in reverse. Johnny wants to know, what broker would you use for day trading? For day trading, there's a few different brokers which are really good. Centerpoint Securities is definitely up there in the top, I would say the top three. So Centerpoint Securities. I also really like Speed Trader Pro, and those are probably the two best. The only other one that I might use for day trading, which I used a long time ago, but I haven't used them in quite a while, is TradeStation. They had some really nice software, and they had their own proprietary programming language also, which allowed you to write some algorithmic stuff, which was really nice. So TradeStation software was really good. At the time, I ended up leaving them because their commissions were just ridiculous. But I think they've recently gone to zero commissions like everybody else at this point. So Centerpoint Securities, Speed Trader Pro, TradeStation, all really good for day trading. Ian says, question, can you go through the meaning of some of the lines on Tastyworks or any chart, any trading platform? Sure. So my charts are really simple. The green and red candles give you the price action, and on any one of these candles, the wicks show you the high and the low, and the body of the candle shows you the open and the close. So if it's a green candle, it means that it closed higher relative to the previous day. If it's a red candle, it means it closed lower relative to the previous day. So the wicks show you the high and the low, and you can see if I hover over them, you have the open, the high, the low, and the close on any one of these candles. The line that you see that says SMA 200, that's the 200-day simple moving average. So that's the average price over the last 200 days. The reason that I have that on these charts is just because in general, you'll find that stocks tend to follow their 200-day moving average, and it will act as support and resistance. So it'll act as support when the stock is coming down to it from above, and it will act as resistance when the stock is coming up to it from underneath. So I use it as a guide to see sort of what the long-term trend is. And the blue line is actually irrelevant on these daily charts. This is the volume weighted average price, which is sort of like a moving average, but it also considers the volume at each price that was traded. So what I would use this for, similar to the 200-day moving average, but I would only use it intraday. So if we're looking at, say, a 5-minute chart, let's look at something that was actually trending today. None of these are really good examples. I mean, GE and Disney are not bad, but the general idea is when a stock is underneath VWAP, volume weighted average price, when a stock's underneath VWAP intraday, it will tend to stay underneath VWAP, and vice versa. When it's above, it will tend to stay above it. So watching those lines for when the stock breaks above or below them, that can indicate price reversals. Simplicity wants to know, can you go through how you develop a strategy for day trading? If you missed the beginning of this stream, go back and watch it after it's posted in the archived streams channel. I answered that exact question at the very beginning before we got started. Okay. Termites, is there an Ichimoku indicator in Tastyworks? Not sure, actually. Yes, there is. Ichimoku cloud. I don't really use any of that stuff. For me, I like to keep my charts clean and simple. The things that matter to me in terms of trading in general are price and volume, because everything else is based on either price or volume for the most part. All these other indicators, moving averages, VWAP, Ichimoku clouds, Fibonacci retracements, like all of this stuff, stochastics, it's all based on price and volume. They're all lagging indicators for the most part, meaning the price and the volume will show you what's going to happen much faster than any of these indicators. However, a lot of them are self-fulfilling prophecies, meaning so many people believe that they work that they actually do work. So I always try to keep that in mind, and I use the ones that are most popular, like the 200, the 50, the 20-day moving average, and VWAP. Thank you. Yes, I like my charts clean and simple. I actually wrote a blog post about this a long time ago. I used to use no indicators at all. All I had was price and volume, and that was it. Just because, to me, that's all that matters. All right. I think I got to all the questions here. Anybody have anything else? Options versus futures, which one do you prefer to trade? Well, I prefer to trade options because I've never traded futures in my life. I trade options primarily because I understand how equities move, and futures, I don't understand the risks properly. So rather than try to be a jack of all trades, master of none, I would rather solidify my knowledge in one specific area, which to me was equities for a long time. So just trading regular old stocks. And after years of doing that, I got into options. So, maybe in another 10 years, I'll get into futures. But for now, I'm focused on options and equities just because that's what I understand. Yeah, so Johnny, the thing is with things like Speed Trader or Centerpoint versus brokers like Thinkorswim and, these other like very popular brokers, E-Trade and stuff like that. I mean, E-Trade is not bad. Thinkorswim is not bad, but the super popular brokers will not often have the best borrowing lists. So if you want to be able to short things that are hard to borrow, if you want to be able to short sell IPOs and stocks that are, that have gone completely psycho and everybody knows that they're going to go down and they're in short supply, you're not going to find that stuff to short sell on brokers like Thinkorswim or E-Trade. But you will find them on brokers like Centerpoint Securities and Speed Trader. All right. Well, listen, guys, it's been about 45 minutes here, so I'm going to cut this off. Thank you so much to everyone for coming. See you all in 2020. We will be back, not the first week of January because that's going to be New Year's on Wednesday, but that second week in January, we'll be back and we'll continue talking about the market. So thanks for coming. Talk to y'all soon.